Welcome to the Real Estate Investor Podcast. I'm your host, Gary Lipsky of Break of Day Capital. I talk to leading experts to discuss a wide range of subjects to educate investors on best-in-class practices to build legacy wealth and positively impact communities. Let's jump in. Hey everyone, welcome to another episode of the Real Estate Investor Podcast. I'm your host, Gary Lipsky with Break of Day Capital. Be sure to join our Facebook group, Asset Management Mastery, where we have a great community of thousands of like-minded individuals sharing resources and best practices. Today on the podcast, we have my good friend Pasha. Pasha is a former professional poker player turned real estate entrepreneur. After flipping 50 homes in Vegas, he scaled into residential development, multifamily, and ultimately founded Evoke Capital, where he focuses on high upside mobile home community investments. Most investors rely on gut feelings, shiny brochures, or hype, and that's exactly how people miss red flags and lose money. At Break of Day Capital, we do things differently. We help investors make smarter decisions before the deal ever hits your inbox. From our educational webinars to our Invest Smart book to real tools like our portfolio tracker, we're here to give you the edge most investors don't even know they need. If you've been valuing our podcast and want to take the next step, subscribe to our newsletter. You'll get early access to webinars, new investor tools, and market insights sent straight to your inbox. Break of Day Capital, because smart investing starts before the deal. Financial advisor Bromley Palamountain of Northwestern Mutual empowers people to make their financial dreams a reality through purpose, clarity, and design. Be sure to check out his links in the show notes. Thanks for joining us, Pasha. Can you start by telling the listeners a little bit more about yourself and what you do?
I got into mobile home communities about 4 years ago now. We started Evoke Capital about 3 years ago. It wasn't really this plan to create the business, but essentially me and my partners, we saw a market opportunity. We really liked the market trends. I had all the stigmas on mobile home communities that you kind of hear about and, you see in the movies. And so I was like, no, I don't want to do this. And then once I learned about it and really kind of entrenched myself into this industry and sector, I was like, oh, if I think this way, everyone else should. And then we just ran out of money, me and my partners. And then we just started Evoke Capital, and it kind of turned into what it is now. I took a little bit of a different path to get here. I college dropout, played poker professionally, but I always knew that real estate was my end game. Ever since I was a child, I really knew that my dream was to own real estate. I still remember when I wrote on my first whiteboard when I was, I had just moved out. So I was like 17 and a half, 18 years old. And I was like, I want to own 5 homes. If I own 5 homes, I'll be set for life. That was kind of my goal. But I knew real estate was always my end goal. And then it was just the journey to get here, so I took my poker winnings and my poker bankroll, flipped my first home, started flipping more homes, playing poker at night, doing real estate in the morning. And I did that for way too long, with almost no sleep. So much better lifestyle now, much more disciplined around my sleep and my lifestyle.
So I read your book, which I loved and highly recommend, and we need to plug it, Raising the Stakes.
Thank you.
But what skill from poker gives you like that a bigger edge in real estate? Like what have you taken from that?
I think that's a really good question. I think it's not just real estate, right? So I think the one thing that what poker innately does, it teaches you probabilities, along with a bunch of other things. But to be a really good poker player, it really drills into you that you have to make the best long-term decision. So day to day when you're playing poker, you have to make good decisions or you're going to lose your chips and you're going to lose your stack and you're going to always have losses. So it teaches you to how to really think through your decision making. Are you making a good decision? What's the probability? What's the math? Because everything ends up just being math. But I think that really the best thing that it taught me, and like I said, it wasn't just for real estate, but it's helped me really scale my real estate business, is really making the best long-term EV play, right? And so for me, I don't really consider let's say we can make a bunch of money on a deal real quick, right? For me, I don't really care about the short-term gain, because sometimes, even though you can make a bunch of money on a short-term deal or a short-term flip, the real wealth might be created when you hold on to it for 10, 15 years, right? And so everything that I do, everything that my partners have and I have done is reinvest back into the business. We don't care about short-term gain. We only care about doing the decision that 5, 10 years from now, we're going to thank ourselves for. So it's really that focus on the long term. It's, just getting rid of that short-term gratification really, I think is that, and making the right mathematical play.
If I remember correctly, your investments, you go for like infinity returns, correct? Like you rarely sell. Is that your play? Because you do the longer term holds.
So we do the longer term holds. There's a big reason for that is one, we're just ourselves, our appetite for me and my partners, and we're still our biggest investors, accumulated total together inside of all of our deals. We're cash flow investors. So we know the longer we hold these properties, the more we're going to end up cash flowing in the long run. Number two, it's all about mitigating risk, right? So what I give the example is if you bought at the top of the market in 2008, you held onto the property for 10 years, more likely than not, 90% probability that you're above where you had bought it, right? Also, secondly, we also do know that the economy is going to keep printing money. We're just designed to keep printing money. We kind of have to at this point. And if you have that philosophy, the name of the game is very simple. It's just a real life monopoly. Buy good assets that is paying for itself and let time do the work, right? So we're very patient investors in that way. And so we do hold on to forever, and it does mean less money in our pockets short term. But every mentor I've ever had who are, incredibly successful billionaires, which I've been very fortunate to have, they just had one simple philosophy. And typically wealth or really anything that's really like compounded is a very simple formula. Keep the properties, either 1031 them or just keep refining in a tax incentivized way and go buy more properties. And at the end, you have a lot of properties that time is doing the work for you. And that's the philosophy we hold at Evoke Capital.
Yeah, I had a friend of mine said, "Do you want to garden or hunt?" And hunting was like constantly searching for deals, and you're selling deals. Whereas garden, yeah, you hold things longer term, and you're taking care of it, and you're reaping the rewards off of that.
Yeah, exactly. And then you're just also doing it in a very tax incentivized way, right? Like, so I do know that if anyone got into the market at the same time I did, had the same resource, same philosophy, but they only decided just to fix and flip essentially, in the long run, I will win, right? If we're just counting wealth creation, I will win hands down because of compound interest, right? They'll make a lot more money in the first 10 years than I will. But again, I don't care about short-term gain because I'm going to do what 20 years down the line Pasha is going to thank me for.
And you're not having those tax, you're having to pay capital gains and all that, particularly with the fix and flips. It's just
that's correct.
Yeah.
Yeah.
What drew you to mobile home communities versus, let's say, industrial, retail, multifamily?
I think it's so number one, it's the expertise of my partners. That's just very simple. They managed and operated essentially a $3 billion portfolio for two principals. So their knowledge was incredibly vast. And I'm a very much in the philosophy, same with my partners, we just stick in our lane. We know what we know, right? There's a lot of shiny objects that come our way. I remember when COVID happened, everyone thought we were in mobile home communities, we should also be in RV parks. But, we don't know anything about RV parks. So we just stayed to what we're experts at. And then let's just maximize what we're experts at. And then there's a bunch of myriad of other reasons why I like mobile home communities. If you want me to go into that, instead of like apartment complexes or like fix and flips, and because those are the ones I have experience with, and like a motel, my personal preference is, I like the consistent cash flow because most of my properties cash flow out the gate. The highest depreciation as a high income earner, that depreciation for me to be able to write it off my taxes was incredibly useful. It's also, market trends, again, I think very long term. It's the only market trend that's in my favor in real estate, in my opinion. It's the only one that more and more people are becoming, unfortunately, in a low income bracket, right? And we're pretty much the last defense before you're homeless or in your car. And we're not building any more of these, right? It's just not feasible. So it's, more getting destroyed. So just market supply and demand for me is really in our favor. And then also lastly, the tenants just don't move. They just stay in the mobile homes, and so it's just consistent cash flow for me.
Out of curiosity, what's the average length of a tenant for something like that?
So there's a stat out there. Obviously, I can't verify it, but this is just plastered all over the internet, that
Yeah.
50% of all mobile home community tenants stay for at least 14 years or longer.
Wow, that's
Yeah.
insane.
Yeah. Imagine your business where you have that kind of consistency in your tenant base, right? So it's just easier to kind of manage and kind of like pro forma what's happening. And then also, one thing is that once you stabilize a mobile home community, which it is a lot harder to stabilize a mobile home community than most people think, but once you get it to that point where it's all tenant owned homes or all RTOs, then you really don't have to do too much. But it is quite difficult to get it from that point, doing the value add to full stabilization.
Yeah, a lot of people think it's, once you buy a mobile home community, it's super easy. So yeah, so
Yeah.
what are the operational levers do you pull to maximize NOI and kind of create a great resident experience?
I think one thing that we do particularly well is our operations. And there's a handful of other operators that are really good at operations, but I will say there's a ton of others. And I don't mean to generalize and really, bag on other operators, but this is just what we see out there is that unfortunately you can get in mobile home communities and you can hit your numbers by just jacking up the rents and not doing the capex that you're supposed to be doing. But because we hold our properties forever, we do all of the things up front. We're always typically doing the roads, the lights. We're making, we're doing all the upgrades that are needed, all the landscaping, getting the right staffing, beautifying the park as much as you can, and so we spend a ton of capex up front and we don't skip any corners, right? Like I learned in development, I learned in flipping that if you cut a corner or you go with the cheap route, it's just going to bite you in the ass later on. So we really spend all the right money up front, which really reduces our repairs and maintenance. We've done an excellent job of being able to get a back office admin staff where we can really take a ton off pressure of the property managers, so our staffing costs can go down as well too, and just a bunch of other operational little efficiencies that we're able to implement as well too. Yeah.
Yeah, I feel like if you invest in your property, the residents will care more about it as well, and take, so they'll clean up more after themselves and take care of
For
their
sure.
space because of that.
100%. It shows. Like if you go to an apartment complex and there's trash on the ground, well, the resident who's like walking around is gonna be like, oh, I can just put it doesn't really matter. But if it's completely clean, like the human psyche is like, oh, I gotta go put this in the trash, right? So it really does show when you care about the property. And the tenants are so happy when we come in because typically and honestly, we're buying from not the greatest operators. Let's just say that they don't, in my opinion, truly care about the tenants. So we love getting these letters from tenants that say, you've improved the park, you've removed the bad tenants, and you made it safer, right? So that's always just a wonderful thing to get from them.
And what does your buy box look like?
So this has shifted since we started. We typically look for about 80 to 300 lots now. Secondary and tertiary markets are our sweet spot. They typically big institutional players kind of stay away unless you have a huge portfolio already there. We are looking for all mostly tenant owned homes. We will not do a big infill play. So the infill being vacant lot, you got to bring a brand new home and then sell it to a tenant. We actually shy away from that. We're not super great at it. There are some operators that are great. It's just the biggest pain in our industry. And we haven't cracked the code yet. We do good at it. We have a full sales team and we're okay at it. But we have no problem of rehabbing the homes that are there. So we always inherit some, park owned homes that we have to rehab and try to sell off to RTOs and whatnot. But that's really, it has to be a good market. It has to be at least over 50K population, over 150 household, or the medium household price sell point has to be over 150. And then the medium household income has to be over 50K with lots of diversity. Like it can't just be the city that has the most employers. Yeah.
Nice. That's a high threshold for median household income.
Yeah. I mean, but that's what we're looking for. Yeah.
Yeah.
That's what sells, and that's what we're able to get good tenants at the rents that we want it to be at.
You mentioned optimism, and I think I'm an optimistic person. Um, but I think when it comes to real estate, you almost have to be a pessimistic person as
Yeah.
far as at least when you're underwriting a deal and looking at deals and figuring out where can I get burned? What are my blind spots? Versus thinking it. I've seen too many deals that come out, particularly in the last few years, where it's just overly optimistic and everything
Oh,
has
I
to work
know.
perfect. And this is a business. It's like things don't go as planned, unfortunately.
Never,
Yeah.
never. I say that all the time. I say if a deal has to go right in every way, it's not a deal in the first place. And you know it better than anyone. So many operators got so burned because they're just so overly optimistic and they were just seeing what everybody else was doing. And they're like, well, if they're paying that price, I feel like I have to. They lost the fundamentals of what real estate is. I give a perfect example. My mentor, the one who first taught me how to do commercial real estate and apartment complexes. He didn't buy a deal for the last 4 years up until this point. He just like, I can't do it. And he's a billionaire. He's like, I can't do it. I can't pay these rates. I don't know how everyone else is doing. And he sat on the sidelines for 4 years. Every single one of his LOIs just went unnoticed. But now he's just like, yeah, man, right now in this moment, like this is perfect for me. Right. We're starting to buy deals again. But people just forget about the fundamentals.
Yep. To have that um the ability to sit and wait and even miss some opportunities, but now you've got the capital for the right time, and now is a great time. Boy, you
Yeah.
could do really, really well, by taking
Yeah.
advantage of that.
What most investors forget, or most real estate investors, a lot of real estate investors, okay. I will say that everything in real estate is cyclical, right? At some point, there's going to be another bubble. And at some point, everyone's going to get burned. And at some point, everyone's going to forget about the lessons that we just learned through everything, right? It's going to happen. I say it all the time. At some point, everyone is going to get burned again. And I'm okay with that, right? I understand when the market is frothy. I understand when the market is low. But just be patient. This is a long life. You don't need to knock it out of the park every single time. Get those singles and doubles every single time, and you're going to be just fine.
Absolutely. So you might have already said it previously, but like if you had to distill your investing philosophy into like one sentence, or one thought, what would that be?
Into one sentence, Gary?
Or a paragraph? Give me a paragraph, whatever you want.
I would say that there was two things that my mentor drilled into me. It's not going to be one sentence, but there's two things that he just drilled into me was hyper-conservatism. Just if just training me, I don't have cushion every single place. He told me it's not a deal. Go find another one. And then patience. Hyper-conservative and patience. And then you gain experience, right? So as you go on, where you can maybe go a little bit less on the buffers. But if there's not massive buffer in your performance, it's not a deal in the first place.
100% agree.
Yeah.
I got one last question for you. Is there like a book or a resource that has, mostly shaped how you think about business or even or investing?
I will say there's one book that I read every single year that changed my life on my relationship with risk, which is Think and Grow Rich, and how to train my brain to get to where I want to be. This is not a book for any real estate investor, but it's called The Price of Tomorrow. Before COVID, I had no debt on almost anything except for my primary residence. Everything was cash and everything. But Price of Tomorrow changed the way I view investing on what our economy is doing. It's not really a real estate book. It's not really anything book other than how the economy really works. And because of that, I started understanding the difference of good debt, bad debt, what the economy is going to do, how to really maximize assets and and get good assets, which has led me to where I'm at today.
Nice. Yeah, that book is recommended very, very often. So it's a classic.
I love that book. Yeah.
So Pasha, thank you so much for pulling back the curtain on mobile home communities and sharing your wisdom. Please tell the listeners where they can find out more about you and your company.
Yeah, you can just go to evokecapital.net. All the information's on there about what we're doing, and then you can just email. And I always scan those emails that come in through that website. So
awesome. Thank you so much. If you love today's conversation, make sure to like, subscribe, and leave a review. This is Gary Lipsky signing off. I'll be back next week with another informative episode on the Real Estate Investor Podcast. To all of our listeners, thanks for joining us. And if you like this episode, please head over to iTunes or Stitcher and like, subscribe, and leave a review, as it will help us reach more people. And if you'd like to learn more about what we do at Break of Day Capital, head over to our website at breakofdaycapital.com and sign up for our newsletter and fill out our investor application. We'll talk to you next week.